Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein with your metals market update for this Wednesday, the 30th of August, 2017, about 1:55 p.m. Central Daylight Time. I feel good. Yesterday when I, at 9:10 in the morning, was on Bloomberg and pressed, what would you be doing here in metals? And I know what I said. Well, the market's come down, and I feel pretty good about that. Also, the stock market has come back. The dollar's come back. The euro currency is broken, and we have to remember the events that are happening. A week from Thursday, the European Central Bank meeting takes place. I would say that if you're in the 120s, 121 area as you were approaching yesterday, you got problems. Mario Draghi's going to be looking at that. So you had some profit taking. You also see the North Korean situation has waned way down. And I think my analysis to you yesterday was on the money. The leader there is like a little baby in a playpen. He's got his rattle. He throws it out because he wants attention all the time. He wants you to come yell at him, do whatever, and he's going to throw that rattle out. That's where you're at. Real pressure is going to come on China from all this because the U.S., I don't care what our partners do, they're going to look to China to solve it. If not, more and more sanctions on China. Get your one trading partner. They rely on you for everything. Under control. That's going to be the message that we get. Now, for the other markets, and gold included, you know, Congress comes back now, so we got the House, the Senate, we got the debt ceiling, we got tax reform, everybody's posturing. Let's not tie Hurricane Harvey to the debt ceiling or the tax reform. Folks, this is Congress. They don't do what you and I would do as humans. They do what's politically right for them. Hate to say it, but I feel that so strong. All right, so let's go with where we're at in the market. When we take a look at the gold, we are still up $16 for the week, and admittedly, we've sold off. But the weekly chart, still in nice shape. The market, as I told you yesterday, I would not want to see this week's low, last week's low of 1280.30 taken out. That would be a problem for me. In fact, I look forward even on the chart. That's a number I don't want to see taken out to keep the weekly chart bullish. When I look at the area chart of closes, pullback's fine. Here's the numbers you don't want to see taken out, 1291. That's way above those 1280 levels. When you come to a daily chart, just a plain bar chart, the market has had an outside day up. It is carried up beautifully into the 1330s, and now we're starting to get our first correction in the market. Now, looking at this chart, if you put the swing line on it, something becomes evident. If you're going to build a pattern of higher lows and higher highs, you already have the higher high pattern. I think you'd agree, 1331.90 takes out that high. As for the break low, wherever it's going to stop in here and turn back up, as long as it doesn't take out 1281.30, that will said to be bullish. When I throw on moving averages, 1291.50 comes to line, and that's going to jump tomorrow. But that sort of ties in back here as we were looking at this chart, not taking out this 1291 area. So the parts of the puzzle are starting to come together. The chart action, not yet from a pure technician's point of view, which I think I am, bullish. You have a lower low, a higher high. You have upside bias. You have the potential for support at 1291.50. In terms of Bollinger Bands, the market has hit the Bollinger Band, hit it in fact on Friday, Monday, and has come slamming down today. And last night, as I told you, the market was trading about $5 lower than where it had closed. That's because the closing, the settlement price is determined at 1:30 Eastern, 12:30 Central, but the market closes 5 o'clock Eastern, 4 o'clock Central. So even though the settlement was there, the market was trading lower. You're getting that. And what's the market doing? The market is abiding by the theory of Bollinger Bands that it will trade within those bands 95% of the time. When I take a look at momentum, I continue to shake my head. I don't like what I'm seeing. This market refuses to convert itself out of overbought into locking in a bull trend. That is a warning sign. Simple. So I don't have anything that I can say on this chart to do. That doesn't mean I would tell you here what to do, but I know what I tell my clients. On this chart, you lack the momentum, you have upside bias, you're at the upper Bollinger Band, and you do not have a trend. When you go to the gold ETF, it's similar to the gold futures. You don't have a trend because you got a lower low, a higher high. Momentum is refusing to embed. It is just staying here in overbought territory, and the market is paying attention to the upper Bollinger Band. None of this means you can't go higher, but you're not going to get the trend followers like me most likely following that. When you come to the ETF of GDX, which is the gold miners, the chart is bullish. You've got higher lows, higher highs, and magically the market today is pulling back right underneath, take a look, the Bollinger Band, which keeps everything bullish on this chart. That doesn't mean a break can't happen, but at least here I can understand the technician saying, hey, on the pullbacks, until that red line closes under 80, and that'll be the key. Until it does that, I think they're buyers on the break. In the gold-silver ratio, you can continue to see you're in a down thrust. What do I mean by that? I mean, if you're just looking how the ratio's going, and this is on a closed basis at the end of each day, it's working itself lower. You no longer need 77.5 ounces or 78 ounces of silver to buy an ounce of gold. You needed, 2 days ago, 75.04. Right now it's 75.14. So load up your bushel basket. Let's not take into account your broker or the coin shop you're going to, their commissions or how they mark things up. On a raw basis of the futures, that's what you would need, 75.14 ounces. Silver market is also overbought. It's refusing to embed just the way that gold is. It's got the same pattern of a lower low and a higher high. It did have, I want you to watch this, look at the green and the red numbers. This is Monday's action. This is yesterday. Today you get a bullish crossover where the 18-day average crossed the 100. That is bullish. So you're going to get a certain amount of people that look at crossover type trading, and they will be fans of the market wanting to come in as long as the market doesn't get under those numbers on a closing basis. At least that's the theory. Okay? Everybody's got a twist and turn to it. So when I make statements here, it's from what I've learned and the theories as I've learned them in 45 years of doing this. In the copper market, you have the embedded reading, bullish. You have the market over the 18-day average, upside bias, bullish. You have higher lows, higher highs, bullish. Until the red line closes under 80, I think traders will be buying this market. And if you look today at the London warehouses, a massive amount of copper was taken out. Somebody's moving copper around and making it harder to get at. That could be of fundamental importance. In the platinum market, my eye, trained as it is, how's that for wording, goes to the overbought condition. Second part, I see a lower low, higher high. No trend. Third part, I realize it got over the upper Bollinger Band, but I also realize it got thrown right back into it. It's looking for direction and doesn't have it, as far as I'm concerned. Guess what the average person's going to say? You're wrong, Ira. The market went up, made a higher high, it's in an uptrend, blah, blah. I agree with them. The bias is up, I've said that. You're over the 18-day average. The market made the higher high. But as a technician, how do you tell yourself to get in? Where are you going to put a stop? What are you going to do and why are you going to do it? Pretty hard market to figure out. The palladium market has led the way up. You don't want to see it give up here because you're going to get a shift possibly between it and platinum. It is bullish until you lose, number one, the embedded reading. A warning sign, but not a get outside, would be losing the pattern of higher lows and higher highs. In the hierarchy of things, the slow stochastic is number one. If it gets under 80, the way I teach trading, that's all I can tell you. For those that would be bullish, I say time to abandon ship, and if it re-embeds, go back into the market. So that's where I'd be on that. In the dollar index, yesterday the sky was falling. The market's down. It's coming apart. I know what I said on numerous TV stations. Lower highs, lower lows, under the Bollinger Band, oversold. Wouldn't surprise me if you're about to get a bounce. Here's your bounce. Where's the resistance on the chart? The 18-day average of closes. What would stop this market from a trend taking out 93.37? So you can pretty well see what the chart action is doing right there, and you got to play it accordingly and see if it offers you anything. And that's about where we're at in the markets, you know, and that's going to be the important thing. What else do you have to prepare yourself for? Friday, you're going to get the non-farm payroll. Now, one of the things I use in my trading all the time is the Moore Research Center. I have been a subscriber with them for, I can't begin to tell you when I wasn't a subscriber. So maybe that's the right way for me to phrase it. And what I do is I look to see the seasonals. Yes, there are seasonals in financial markets. There are seasonals in grains. Do they always work? No, they do not always work. That's why you get the word contra-seasonal trade. They just didn't work. But it's no different than moving averages. Do they always work? No. Does a slow stochastic trade always work? No, doesn't always work. Nothing always works that I know of except death. Even taxes, I don't know if they always work, but death works. So what I do and how I work it, I look to see buy and sell dates. Are there any, number one? If they are, what's been their general strength? How have they done? What's the average they've made over certain periods of time? I then always look to say, am I a bull year or a bear year for that market? And you can take and go online with their charts, by the way, and look at only bull or bear years or all the years together, because it's interactive charting. It's really cool that way. It'll give you the entry date, the exit, the most money the market went against that trade, blah, blah, blah. And if it doesn't work out, and doesn't work out in a certain percentage, they drop that trade going forward as a seasonal. That's a copy of the interactive. If you haven't tried it, you owe it to yourself, and it's free. It's a 2-week trial. Call my staff. Go to our website, www.iraepstein.com. You can click up here at any time, and you'll see the forms. It'll be right there in one of the forms, or underneath us, it's here. But now that we're coming to the grain harvest season and we're getting back into the real trade season, I call it right after Labor Day, put all the tools you can at your hand. Learn how to use them. That's the key. I'm Ira Epstein. You have yourself a good day, and I'll see you at the end of the day financial report.